We're nowhere. We're nowhere. We're nothing.
Eventually, you graduate to maximalist when you.
Bitcoin is as good as gold.
Although at one point the crypto market was worth over $3 trillion, Kevin O'Leary believes that is absolutely nothing compared to what's coming once regulation is here. Michael Saylor tells you what it really means to be a Bitcoin maximalist. And Mark Yosko says Bitcoin is as good as gold and is sometimes superior. This is the State of Crypto. Subscribe for great content and hit the like button.
No institutional capital. We're nowhere. We're nowhere. We're nothing. I mean, everybody's excited about Bitcoin. The fact is, sovereign funds globally, which have most of the capital and pension plans, U.S. stateside, zero, nothing. So for all the excitement, we got a long way to go, and they're never going to invest in it until we get policy and we get regulated. And that's the whole investment thesis. The whole idea is you're getting ahead of the institution here. If you believe that it has economic value and you put a portfolio together, you're going to get in long before $1 trillion worth of capital comes in this market. Bitcoin itself is not $1 trillion. That's nothing. It's nothing in the constants of financial assets. The whole market, 3 trillion. That's nothing. I know it sounds like a big number. Nothing. It's nothing. You compare it to real estate or even gold, nothing. And so that's why there's an opportunity here. You don't have to be a crypto cowboy. You have to think methodically. If there's real economic value, you position yourself now, and I suggest here's how you do it. I make the assumption, I could be wrong, but in the next 12 years, crypto will be the 12th sector of the S&P. There's 11 sectors. If you look at how a sovereign fund or pension plan manages capital, let's say they have $100 billion. That's the world I work in. They allocate up to 20% in any one sector and up to 5% in any one name. So if you're really bullish, like I am on crypto, you put 20% of the operating company's capital into crypto and no more than 5% into any one coin, token, blockchain, or level 2, whatever you want to call it. And that's what I've done. I got 32 positions. I got 20% of the capital tied up. It's volatile as hell, but I'm okay with it because I make the assumption at some point, all of this policy that's being proposed will be adopted, and then Katie bar the doors. Then we'll have a real asset.
And eventually you graduate to maximalist when you realize that it's not just a good technical idea. It's an essential entitlement to the human race. And so I would say now, I view my role as maximalist, what I want. And I don't get caught up in all the other definitions of maximalist and what do people think that means. If you believe that Bitcoin is a technology to give property rights to 8 billion people, and if you believe that property rights are a good thing and freedom is a good thing and sovereignty is a good thing, then you're a maximalist. And now you're just going to try to figure out how to spread the network to as many people as possible in any way possible.
So Bitcoin is as good as gold, meaning it's equally scarce, which is what makes gold valuable. It's scarcity. And yet it's more divisible and more portable. Right? If I had a bar of gold and I wanted to break it in half and give you half, really hard to do. If I want to send you half a Bitcoin, instantaneous. If I want to take that bar of gold and stuff it into the TCP/IP internet protocol we're using right now, it doesn't work. But I can use that protocol to send you Bitcoin instantaneously. And because it's an open public ledger that's cryptographically secure, I can know as soon as I transfer that value to you. And this can be anything of value. It can be a Bitcoin, it could be a car, it could be a house, it could be a stock certificate. Anything of value can become a token in a ledger, in a blockchain, and be secure. And the reason I call it the truth net is in the old days, to transfer value, we needed trust. And blockchain replaces trust with truth. Because here's the thing, I lend you money in the olden days. And I write down in my ledger, Matt owes me $100. You come back with $110, pay me. And I'm like, oh no, Matt, it says right here, you owe me 200. You're like, no, I only borrowed 100. Too bad. I have the record and you lose. So the Medicis, the benevolent Medicis, came along 800 years ago and said, you know, Matt, you keep a ledger. Mark, you keep a ledger. And in their days, they used actually things called tally sticks, where you actually had a stick and you had a little carving. And we, the benevolent Medicis, for a small fee, will determine which is right. So Mark wrote down 200, Matt wrote down 100, but we wrote down 100. So we established trust. So for 800 years, we've had this banking cabal that has been the trusted third party. So any value exchange had to go through this banking cabal owned by the Rothschilds and the Medicis and the Morgans and the Rockefellers, et cetera.